Hi everyone, let's go over my medium time frame and low time frame bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the medium time frame bullish scenario, where we are still looking for a move to the downside in either a wave 3 or a wave C after wave 2 or B is in. Currently, price is finding support on the 0.236, which is a very rare Fibonacci target for both the wave 2 and the wave B, pulled from the low to the high of wave A or wave 1, with the common wave B targets being the 0.382 to the 886. That's quite a big area, of course. And for wave 2, most commonly we would be looking for the 0.5 to the 0.786, with the 382 being a rare target for a wave 2. Now, in this scenario, we would therefore expect another move towards the downside, where if we look at the support areas, we do have some confluence between a couple of fibs and the additional support that we have. So around the 382, looking between 28.8k and 29.1k, around the 0.5, 27.8k to 28.2k, and around the 786 between 26.2k and 26.5k. Now, if we then look towards the upside, then the move that we'll get towards the upside is either going to be a 3 or a C in this scenario as a follow-up from this move. A wave 3 is more parabolic, with volume increasing to the upside as well, while a wave C tends to be more lazy and takes a bit more time. The most common wave C target is between the 1 and the 1.236, taken from the low to the high of A to the potential low of B around the 382, where currently the target area is sitting between 35.5k and 37k. And for a wave 3, if we're going to have an impulsive structure to the upside, then the 1.618 is a minimum target, sitting at 39.5k. If we go to the bearish scenario, we expect another move to the downside, where the most common target for wave Y is between the 1 and the 1.236, pulled from the high to the low of W to the high of wave X, with inside wave X an expanding flat hitting the target perfectly, and now you want to see a move to the downside. Now, most commonly in a wave Y, you'll either have a zigzag, flat, or a triangle. Now, this can't really be a zigzag anymore, which is a 5-3-5 wave move to the downside towards this target area between 26.2 and 24.9k. A flat is something like this, expanding flat. Now, that might be possible on the local time frames, which I'll show in a second, but wave C doesn't have a target going all the way down, and a triangle, well, I mean, if anyone can count a triangle in here, you know, that's very, very good. But that's not gonna happen in this scenario. So you do have sometimes WXYs in wave Y potentially, but the official rule says stick to the simple stuff, and at the moment that's not really what we can count. So therefore this scenario is an alternative. If we go to the lower time frames and I zoom in, then what I would be looking for over here is, at the moment in a bearish scenario, an expanding flat ABC. So we then have a 3-wave structure in a wave A, 3-wave structure in a wave B, and then we're looking for an impulsive C to the downside. Now, this wave B hit the most common target area for a wave B, which is the 1.236 to the 1.38, which is pulled from the high to the low of A, which is like very nice. And then if we look inside wave B and we're looking at a 3-wave structure, then the most common target area for a 3-wave structure, WXY or an ABC, is between the 1 and the 1.236, pulled from the low to this high to this low. And if I then here zoom in a little bit, you can see that also this target area has been nicely respected. The lines that you see on the chart, the horizontal lines, those are high. So first of all, we had the high of the range. And what I think is important to share is that after this move up, price is now ranging below the high of this range. It's now turned into resistance. The first white line that you see over here is one of the 2022 range highs for then a liquidity grab and potentially a move to the downside. Very interesting indeed. And what you also see is that on the 1 hour, candles closed above this high over here. On the 2 hour, candles closed above. On the 4 hour, candles closed above. However, on the 3 hour, we got a nice big wick. So could this be a double swing failure pattern basically? Swing failuring the 2022 range high plus the high that we have over here, then backtesting this area for a move to the downside in a wave C. Very attractive indeed, where the most common target area for wave C between the two 1.618s over here is around the 29.1k level and 28.3k level, which is also interesting because then it is around the support that we have over here around the 29k target box, And it is also very close to the 28K target area, where a rare target for a wave C in an expanding flat is the 2.618 target, sitting here at 27.3K. That is rare for a reason, but it should at least give us an idea that if price moves to the lower target box over here, it is possible, right? And especially this lower target box can be interesting on the higher time frames, because if we zoom out for the volume profile of this range, if price manages to go below the value area high, the probabilities are quite high to go to the point of control, which is in that 28K target box. So therefore that area is definitely an area of interest for potentially support and then a continuation to the upside. Now locally, the first area of support in case price goes down is between a 30.5K and a 30.7K, and then we wait and observe how price is going to react inside of this area. If we then look at the low time frame bullish scenario, well, I said it yesterday in my update, right? Like the probabilities are not on the side. And of course, yesterday, I know, like price was ranging over here around this area. It just took the double top and it had this move to the downside. And I mentioned the probabilities, and that's true. The probabilities from an Elliott Wave scenario were not bullish, right? Because how does one count this as an impulsive structure? I don't know. Like yesterday in the YouTube gold stream, I streamed for like 2 hours and we were going through this structure as well. And we went through it with the replay button over here, where if you use this, you can remove the chart and then you just click on play and the chart will form. And we were basically like recounting and reanalyzing this piece of chart. And to this moment, I cannot deny that it is incredibly difficult to find any form of bullish impulsive count in this particular scenario. So this has to be a finished three-wave structure in a WXY with then inside wave Y a regular flat. Now that's all good, all nice, right? But then this structure over here, you can see I have two counts on the chart. First of all, the blue one, which then is some sort of an expanding diagonal in a bigger wave one. Now, expanding structures are extremely rare and therefore never preferred. But you then have a 1, 2, 3, 4 and eventually a wave 5. Now, this wave 1 looks very three-wavy, meaning that all the waves should then be zigzags. Now, one could argue that is true. So, zigzag down, up, okay. And then we would be looking for a wave 2 to the downside and then continuation in a wave 3. Now, if that is the case, the most common target areas for a wave 2 is again around that blue target box that I have over here. That's another reason why it is important support. So you have the 0.5 to the 0.786 sitting between 30.8K and 30.2K with the golden pocket, by far the most common target for a wave 2, inside this blue target area. So very, very important support. Then you have the yellow count, which is a bit more unique, because if we open the volume, then you saw that the volume was kicking in yesterday, right? With this move to the upside. So was it potentially wave 3 material? Well, I mentioned in the group and also the updates in silver, I was like, well, you want to see like continuation, right? If this is a wave 3, volume is coming in, you want to see bam, you know, they want to see big candles move to the upside. That's what you're going to be looking for, just like we had over here, for example, right? Moves towards the upside and now it's stagnating. It's even ranging below this high over here. Now, if this was or is a potential wave 3, then somehow a wave 1 and a wave 2 has to be finished already. And then I would come to the conclusion that this over here inside of this wave 1, this is going to be very awkward, guys. So you then have a wave 1, 2, 3, 4 and this is a 5. I mean, there's no other way to count this. It's ridiculous. And then you have a 3 wave in a 2 and then this is the beginning of a bigger wave 3 to the upside, right? That's then what you would be looking for. Can price move a little bit further to the upside? And then yes, of course, right? We have this space as a resistance area for a wave B high. We still have the 1.38 as well as a target for a wave B. We did already take the high at 31.7, right? So preferably we just want to see a move to the downside. And in this bullish scenario, you go down and back up. It's just, as you notice, it's an awkward scenario, right? And that's why the probabilities remain higher for downside. I can't help it. It's just Elliott Wave wise, and also seeing this price action, yeah, it's the way it is sometimes. So if we go to the CVD divergences, now these played out. The bullish CVD divergences more locally played out. The bigger one we had played out as well as price took this high. That's very nice. And if we go to the local chart and zoom in a little bit, we see bearish CVD divergence, lower high on price, higher high on yellow, which is a bearish CVD divergence here. And we have to wait and see what price is going to do, because this high, we know, wicked one of the highs of 2022. So all the divergences that I'm going to keep an eye on are divergences on the right side of this high, so not with the left. So even though you could argue over here we have a higher low in price, but we have a lower low on the blue CVD, hey, that's bullish, right? Target is this high. It's absolutely possible, but I prefer to look at the divs on the right side of the high, because after swing failure patterns there is a probability that's quite high that CVD is leading. So I prefer to be better safe than sorry and look at CVDs on the right. Now currently we then have a little bit of bearish CVDs going on over here, which is quite interesting, of course, and we wait and see how that's going to pan out. Now if we look at the news, there's no red flags today. That already happened on Thursday and Wednesday, but we do have G20 meetings. Now, I have no idea if that's going to have any impact. No one knows, of course, but day one, day two on Saturday, we might have some additional volatility coming in. And if we then finally look at the probabilities, well, there you go. On the medium time frame, the bullish scenario is preferred, where we are eventually going to find more downside, where first everyone gets flushed out, and that's something I actually wrote just now in the like update section as well in Discord, where if we go to the updates, I said over here that, you know, higher probability for downside than upside, and are the market makers this kind to let everyone win that is buying, right? Like having a big flush to the downside could be so attractive, but here, oh my, how nice would it be to flush everyone with a quick wave C down before continuation? Because people have, of course, been buying over here, buying especially up here. And I think a quick flush would be very interesting in this bullish scenario. And then on the low time frame, I think the bearish scenario is very interesting, with then a flat over here, expanding flat, which is, in my opinion, the highest probability scenario because of the price action that we have over here. That, again, as an impulsive structure is extremely weird to count. You know, it doesn't really follow any great impulsive rules. So that being said, I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.